Hello again, friends. I am a VA mortgage specialist, and in this video, we are going to talk about VA home loans. This is a complete guide to VA home loans. If you're new to my YouTube channel, I am a mortgage loan officer here in the Dayton, Ohio market. I am licensed in 10 states, and through my company partner program, we actually have authorization to lend in about 40 states right now. And if you aren't in those 40 states, I actually have connections all over the country that can help you with VA loans. So today I want to talk a little bit about how the VA loan process works, answer a few questions. As always, if you have any questions or concerns, you can always hit me up on my website at cscarpero.com or leave a comment. After this video has been posted, I will go back and look at comments to make sure that nothing is left to chance. So let's get to it. So VA loans, here's some primary benefits of using a VA home loan. One, it's 100% financing. I mean, there is no down payment. Isn't that awesome? The other thing is VA home loans, for your closing costs, you can use what's called gift funds. Basically, that means that you can have someone gift you the money for VA loans. So there are a couple of options on the gift funds. So you can either have family give you the money for closing costs. So those are closing costs. There's no down payment on VA. But for the closing costs, there's a few options. You can either get gift funds from a relative, or you can have the seller pay closing costs. So there's all kind of ways to structure it so that you won't need to bring any actual money to closing. So one of the misnomers is people think, oh, just because it's a VA loan that you don't have to bring your money to closing. And that can be the case, but you have to structure a certain way. The other thing is lower FICO score requirements. And I'm going to zoom in a little closer on this section. Lower FICO score requirements, and that doesn't mean that any deadbeat that can't pay their bills can get a VA loan, but it's a lot easier to get a VA loan than a conventional loan because VA has specifically said that they want you to be flexible in the underwriting guidelines. It also has lower interest rates, usually about a half point less than a conventional mortgage, so that's awesome. But it also has lower fees. It has extremely flexible underwriting, and so there's all kind of deals that I've closed out of the numerous deals that I've done here in the Ohio market where they couldn't get done conventionally or on FHA. We were able to get them done on VA. Also, you can do something called energy efficient improvements, and so that is where you can do like solar panels, those kind of things. You can actually finance that in the loan, which is really cool. They are also fully assumable, and that's really huge the past couple of years, because we've had these 2% rates, and there are all these VA loans sitting out there at 2.5%, 3%. And you could assume someone else's VA loan right now and save a bunch of money, since right now rates are around 6 when I'm recording this video. VA loans have no prepayment penalty per federal law. They also have no mortgage insurance. And so, for example, if you're getting a conventional loan, you would have mortgage insurance. You're putting less than 20% down. Now, the VA does have something called a funding fee. It's a one-time fee of 2.3%. I'm sorry, 2.15. They just lowered it. 2.15%. And that is a one-time fee that's rolled in on top of the loan. But if you are collecting the VA disability, that fee is waived, which is awesome. That funding fee can be financed. So, for example, if someone is buying at, say, $200,000, that would be a little bit over 104 would be the actual loan amount. So it would be 102.5% of the loan. You can also do cash out refis on VA. Really nice. Right now, credit cards are 20, 25%. And so it's a great way to save money. The VA also allows something called a streamlined IRL, which is a way to refinance a VA mortgage loan with no income check, very little credit check, a very minimal credit check, and it's lower closing costs on the VA Streamline. Very great product. And you can also get seller concessions, and there's all kind of interesting things you can do on a VA loan with seller concessions. So, for example, the seller pay for TVs, you have the seller pay for your credit card bills, you have all kind of weird stuff happen. And sometimes you need that to make the loan happen on a VA loan. So one thing to keep in mind is the VA does not write the loan. They just set the ground rules and the insurance. And then the lender, whatever mortgage company you're using, whether it's me, whether it's USAA, whether it's your local bank, whoever you're using, they would have something called overlays on top of the ground rules that the VA sets. Now, that being said, because I'm a broker and I have 110 different lenders that I work with, we have a lot less overlays because I can play those underwriters against each other. And, I might know that underwriter over here has an overlay, the underwriter over there does not have an overlay, so I can kind of play them against each other and make that happen. And here's a really interesting thing from the VA handbook that people don't realize is underwriters are encouraged to consider every possible acceptable factor in seeking a proper basis for approving VA loan applications for every qualified veteran. As long as lenders document their reasoning, it is extremely unlikely VA staff would ever take issue with their decision. So they basically saying underwriters need to use common sense. So sounds good, right? So, a few of the ground rules. Rule number one, you must intend to occupy the property. This is not meant for a fix and flip, although there's a renovation product. So, you'll actually sign something at closing saying that you'll move in within 60 days. That can be extended up to a year if you are on active duty. And so, definitely something you need to know. The spouse can also satisfy occupancy. Sometimes if the couple are in two different locations, the spouse might have to do the occupancy certification. And so there are certain situations where maybe the veteran's working overseas, the spouse goes and satisfy the occupancy, or even their child can satisfy occupancy. Well, maybe if they're not married and the veteran and his ex have a child together, that ex-girlfriend could satisfy occupancy as well. Intermediate occupancy by a single veteran is not acceptable, but by married veterans, it can be. Intermediate occupancy is kind of where you are in the house only part-time. And so they have all kind of interesting rules about that. But if you can prove that you're living in a certain area and you're only there part-time, it is possible. So my dad used to do this. He would live here in the Dayton, Ohio area, and he would get these temporary contract jobs as a defense contractor in different cities around the country. And so he'd only be in Dayton on the weekends. Well, that's considered intermittent occupancy. And so it is allowable on VA, but underwriters get kind of tricky about that. So definitely it's something to run by your loan officer. Family members, friends, and relatives who have power of attorney over the veteran's children can also satisfy occupancy on the behalf of the veteran. That regularly happens. Rule number two, you must be eligible for the VA loan as a veteran. What a crazy idea. You must actually be a veteran to get a VA loan. And so here are some times of service. So typically for most people, it's 2 years, although they're all kind of weird little idiosyncrasies on that. Or if you're currently serving, you can get it in this little 90 days if you're currently serving. If you're serving the National Guard, we'll look to see if you've been deployed at all. And if you have been deployed at least 90 days, then you can get the VA loan. The surviving spouses could also get the VA loan. And so a surviving spouse is someone that the veteran was killed in the line of duty. That would be their surviving spouse. Now, for a surviving spouse, that has to be directly related to their service. And so that's one of the things that's kind of tricky on the VA loan that people don't realize. I've had situations where they're like, well, my spouse died. I'm like, okay, did they die during your actual service or just randomly or what happened? And so if it was directly related to the service, then they could qualify for that surviving spouse. If they just had a heart attack randomly, then that would not count. That makes sense. The other thing is the VA loan cannot be passed down from generation to generation. People are like, well, my dad was a veteran. Well, my grandfather's one too. That doesn't matter on the VA loan. It has to be the veteran and spouse or the surviving spouse that was killed in the line of duty or a short time afterwards. So the other thing is like a short time afterwards, like if they were killed in the line of duty or if they maybe like right now, I get these Agent Orange cases and you get these people that had Agent Orange in Vietnam, 50 years ago, and now they suddenly developed cancer and passed away at 75 years old. Those would actually count as surviving spouses, believe it or not, because they were able to connect that to their service. The other thing is they must have enough entitlement shown on the certificate of eligibility. So here is the certificate of eligibility, and it only shows 36,000, but 36,000 is actually considered full entitlement. So with that full entitlement, they can buy as much as they want, as much property as they want. It's considered full entitlement. Obviously, they need to qualify for income and credit, but as far as entitlement, they're good to go. Now, if they went over, you can actually have multiple VA loans, and you get your basic entitlement, you get your bonus entitlement. It gets very, very confusing. So if you're buying just one home and you've never had and you don't currently have a VA loan, or if your VA loan is going to be paid off at closing, then you can buy as much as you want. Now, if you're trying to keep that house and have multiple houses at the same time, then you get into what's called basic entitlement and bonus entitlement. And what we would do is actually add those two loans together. And if it's under the county max of 726,200 as of right now, 2023 in Ohio, it does vary in other areas. If it is under that county max of 726,200, you can still buy zero down. Now, if those two loans put together are over 726,200, then you would have to pay 25% of the difference on that loan. There we go. Rule number 4, the veteran must qualify for the loan. What a crazy idea. One of the things that the VA does look at is something called residual income. That is the net take-home pay minus other net income minus the loan amounts. And then one of the big things they do look at is child support, alimony, and also child care. The VA is really, really picky about child care expenses, which other types of loans don't look at. And so if you have all that, they would use that for the residual income. And they have specific guidelines, there's tables. And so here's the basic table. I know it gets really confusing. So here in the Midwest where I'm at, basically what they do is they look at all those debts, and there has to be at least $441 a month left for a single person, or if there's a family of 5, 1,039 needs to be left after everything is all said and done. And before we get into properties, I want to talk a little bit more about eligibility. And so VA looks at something called credit collateral and capacity. And there's something called manual underwriting, and there's something called automated underwriting. And so with automated underwriting, basically I put everything into the system, press a button, and it either says approved or declined. And that's one of the best ways to do underwriting because it's so simple, easy to understand. Now the VA also does allow something called manual underwriting. With manual underwriting, the VA sets some basic guidelines. Lenders can also set their overlays on top of that. But I would submit that to an underwriter and say, here's the situation. Here is why we should underwrite this loan. The big thing to keep in mind for manual underwriting is there shouldn't be any delinquencies in the past year, because that will definitely screw things up for us and it won't get approved. And it needs to be explainable. The big thing with manual underwriting, you can't be like, well, it's unfair. Sorry, my credit sucks. No, that's not how manual underwriting works. But if there is a certain situation that happened, so maybe 2 years ago you lost your job, now you have your job back, everything the past year has been current, manual underwriting very well could work. The other one I've seen a lot, I've helped a few people with this, is a light credit profile. So for example, I had one where the borrower is a cash and carry, kind of guy. He didn't really have a lot of credit cards. And so his credit score wasn't that good because he just didn't have a lot of credit. But I was able to prove he's a responsible person. And it just didn't have a lot of credit. We were able to show that through the underwriting process. And sure enough, he was able to prove that on manual underwriting. So it's definitely one to consider as well. The other thing to consider on the VA loan is there is no minimum credit score. That being said, we can't approve just any old knucklehead that walks in the door and talks to me. Typically 580 or higher is what I recommend. But, rules are meant to be bent, for lack of better phrasing. So somebody with a 500 score, but maybe they had some things 5 years ago and now are looking good, could certainly possibly get an approval there. Bankruptcy and foreclosure. So for a bankruptcy, it needs to be at least 2 years out, typically 2 years out for foreclosure. The VA does have some guidelines on that where you can get around that as little as 1 year. Less than 1 year, pretty much impossible. And even the 1 to 2 year period where it's under 2, those guidelines are super, super tight. That's be a very, very good reason for it. Oftentimes in medical collections, we can sometimes make waivers on that, but underwriters are super picky about that stuff. So as far as collateral, funds in the bank is certainly helpful, not required. I've done VA loans with $50 in the bank before it happens. As far as work, you will have to submit a letter showing how your military experience qualifies you for the job. So it's a little different, that you have to justify why you have your current employment. But I think it's a good thing because, they're looking for people that are actually doing work related to what they studied. What a crazy idea. And the other really nice thing about VA loans is there's no minimum job history on a W-2 person. As long as you have that letter showing how your employment is related to your job, you're good to go. I've had people literally get a offer of employment, go under contract, and then the day they start their job, we get things cleared. So it's really good. You can use disability income on VA loans. We can gross that up even since there's no taxes on it, which would actually make you qualify for more money, which is really cool. The big thing to consider that and alimony and child support and all that stuff is that you need to have something called continuance. And so for continuance means that you're going to get that for at least 3 years after you apply for the loan. So typically I don't see that unless it's like an alimony or child support situation where maybe somebody's getting alimony, but they're only getting it for another year, or you got a 16-year-old and the child support only lasts till they're 18, like that kind of stuff. Then in that case, you would not have continuance. VA also has no debt ratio requirement, which is really cool. That being said, if it's over 50% debt ratio, which is all your debts versus all your income divided by your debts, that can get problematic. But I'm approved something pretty darn high. It's like I said, it's a make sense loan. The loan has to make sense for what they're doing. As far as properties, we're going to get back to the other screen here. As far as property, the property needs to be VA eligible, and some things you can buy with a VA loan. You can buy single family residence. You can actually buy up to 4 units. One of the really cool things about VA loans is you can actually live in one unit and rent out the other 3 on a fourplex and actually use those rents towards your qualification income, which is really cool. Condos need to be VA approved. You also use manufactured homes and townhouses as well. Really cool. One of the things the VA says is the house must be safe, sound, and sanitary. Now, what does that mean? It means you can't live in a house that's unsafe. Your electrical outlets need to work, water needs to work, all appliances need to work. Pretty basic stuff. A couple of things the VA is kind of picky about. They are very, very picky about handrails. They're picky about peeling paint. But I think that these are all things that are common sense. And the house shouldn't have termites. They'll make you get a termite inspection in most areas, which I think is a good idea. Who wants to live in a house with termites? I don't know why people get upset about a termite inspection. You wouldn't want to live in a house with termites, would you? I certainly wouldn't. So it's definitely something to consider as well. Everything is VA allowed for appraisal appeals. So what is an appraisal appeal? So say you have the appraiser comes and says, hey, we took a look at this appraisal and we don't think we can justify that value. They can call what's called Tidewater. Now, Tidewater is where the appraiser says these comps aren't working for us, and they will actually have the realtor reach back out to them and provide comparables to justify the value, which I think is a very good thing. Now, say you have that appraisal and the Tidewater doesn't work, the appraiser still appraises it low. There is actually a second level of appeal, and that is called the reconsideration of value. The reconsideration of values period, the buyer can actually send an appeals letter through their lender to the VA saying, hey, we don't like this valuation and we want to reconsider that value. And the VA has a staff appraiser that would actually take a look at that. And it can take 2 to 3 weeks, but I fought a few and won that on that reconsideration of value. It's definitely something that can help you get approved in those situations. Now, in those situations, you can't just say, well, I don't like the value. Reconsider it. You can't do it that way. Or you can't be like, this appraiser is unfair. Reconsider it. No, you can't do that. With a reconsideration of value, what would happen is that the VA staff appraiser or SAR will take a look at the appraisal and you need an appeals letter justifying why that appraiser was unfair. So, for example, I had one here in Troy, Ohio, where they were able to prove that it was a fast growing area and the appraiser didn't consider that the properties were actually worth 20% higher than the appraiser had said because the comparable sales were over a year old. Like that kind of thing is where you can do that reconsideration of value for sure. Appraisal timeline. The VA requires that the appraisal be completed in a timely manner. In Ohio, these are completed in 5 business days after it's ordered, and I will call them out on that. But it does vary in every state, and the VA actually sets guidelines on that. And they can also not charge extra money for appraisals, which is really nice because on conventional FHA, we're seeing a lot of appraisers saying, well, we'll do it in this time period for this price, but if you want it rushed, then we will do something else, which isn't very fair. And so we talked before, we talk about closing costs. A few other things to consider. The VA does have what's called a funding fee, which I mentioned before. It is currently 2.15% of the loan amount. It's a one-time fee. That is if you go zero down. Now, if you're putting some money down, those amounts do go down. The other thing to consider is if you are collecting VA disability with a rating of 10% or higher, that funding fee can be waived, which is really cool. That amount will be shown on the certificate of eligibility. Those aren't always correct, and that's something I can review with you to make sure that it is correct when we are working on that certificate of eligibility. So typically, I will collect the certificate of eligibility. You can collect it too, but typically I'll collect it for you, and then we can review it together, and then we can make sure that all the amounts are correct. The other thing is if you file a claim before closing and the claim has not been approved, you can actually get that funding fee refunded later after closing, which is really cool. And so let's talk about reducing your cash to close a little bit. So cash to close is the amount you need to bring to closing. VA actually allows something called seller concessions. And so seller concessions are up to 4% of the reasonable amount of the loan. And there are some limits on that. So some things that the seller can pay for that go towards that 4% rule are prepayment of the veteran's funding fee, gifts such as TV or appliances, which you can't do that on any other kind of loan, by the way. Payment of extra points to buy down the rate beyond what's considered current market conditions. So if you want to get a lower rate, so say maybe you want to get 4% or something crazy that's much lower than standard rates, you could do that and use the VA concessions. You can also use, you have to do what's called a temporary buy down, where you're using escrowed funds to get a lower rate and a lower payment temporarily. And you can also use it to pay off credit balances or judgments on behalf of the buyer. I don't see these often, every so often, if there's a situation where some things need to be paid off in order to qualify for the loan, that can happen. The thing to keep in mind is that, they can also assist with payment of VA allowable closing costs above the 4%. So appraisal, credit report, recording fees, taxes, origination fees are not counted towards the 4%. A lot of people get that part wrong. And feel free to reach out to me with questions about that. I know it gets really confusing as quickly as I go through that section. Other thing to keep in mind here in Ohio is we have a disabled veterans property tax deduction. So here in Ohio, what would happen is after closing, so say the house appraised for $200,000, you would file something after closing and actually get reduced property taxes, which is really cool. And I will walk you through that process. It's pretty simple from the county auditor. So there's the basics of that. So here's how you get started. You need to get an application, get pre-qualified. If you go to my website, cscarpero.com, I can take an application from you, pull credit, give you a full estimate of all your fees, cash to close, all that kind of stuff. Next thing you need to do is send in your documents, get pre-approved, need a pay stub, your W-2s, and I'll also pull your certificate of eligibility for you. Next thing is you need to find a realtor. And if you don't know of a realtor, I can certainly help you with that. I do recommend that you use your own buyer's agent. Don't use the listing agent that is showing you the property because they work for the seller and they don't work for you. Make sure that whoever you're working with as a realtor has taken a certification program. I'm part of a program called Veta VA, which can help you out. And I can certainly walk you through that as well. Step 4 is make an offer. Put in a strong offer. Have the lender call the buyer's agent, and so you can minimize your seller concessions. I'll even write letters for you saying that this is a VA loan, that it's a strong buyer, all that kind of stuff. Other ways you can negotiate in a strong market, offer a quick closing, show how reliable you are, or how reliable the lender is, I should say, and flexibility to meet the seller's needs. Step 5 is disclosures. And make sure that the disclosures matches what you were told. Oftentimes loan officers will say things on the phone, and then you get those disclosures and they don't match. I'll try my best to give you honest disclosures, but unfortunately there are people that will give dishonest disclosures just to bait and switch you. And then step 6 is you go into underwriting. You'll get more paperwork after underwriting. What'll happen is the underwriter will review that, and you'll see all kinds of more paperwork. Step 7 is the appraisal. You cannot choose your appraiser. The VA will actually choose your appraiser for you. And then the appraiser will determine if the home meets VA guidelines and find out if repairs need to be met in order to meet the valuation. And then what will happen is you get a closing disclosure right before closing, just showing all your final numbers. Hopefully that works out. And then clear to close and closing day. So went through that pretty quick. I hope you enjoyed these basics of VA loans. If you have any questions, feel free to leave a comment below. Obviously this isn't, if you're not watching this on the live stream, I will come back to it and review all the questions to see what's going on, what questions you have. And so I've written down a few commonly asked questions that I've seen in various chats. So the first one is, how much are the closing costs? And closing costs really vary on VA home loans. On average, they're about $5,000, but it can vary based on what you're doing. The next question is, can I roll in closing costs to the home purchase? And the answer is yes and no. When you're doing a home purchase, you would actually have to, there are a couple of ways you can do that on the VA home loan. You can either get seller concessions, like I mentioned a minute ago, or you can actually get what's called a lender credit to reduce those closing costs. The other question I often get is, do VA loans take longer to close? The answer is no. There are actual studies showing that the average VA loan is about 28 days to close. Conventional loans almost identical, about 28 days. I've also seen that people ask, are appraisers giving lower values? The answer is no, they are not. The VA has its own independent appraisers. And the really cool thing about the VA home loan is that you can appeal it, like we mentioned a minute ago. Next question is, are VA loans harder to get accepted? And I don't think they are. I've seen a lot of people say they're harder, but it's really, do you have a loan officer that's helping you out with the loan process? Next question I've often seen is, can you buy a multi-family home on a VA home loan? The answer is yes, you can. You can buy up to 4 units. You can actually rent out one of those 4 units. It's really cool. Next question is, can you buy new construction on a VA home loan? Heck yeah, you can. You can either buy in a existing subdivision on a new construction, or you can do what's called a one-time close, which is where you buy a vacant lot and put a house on it as well. Other thing that I often get asked is, can you renovate a home on the VA home loan product? And yes, you can. The VA has something called the VA renovation loan, where you would roll in the renovation cost with the home loan cost. So those are a few questions about VA home loans. And so, quick question for you. Imagine how awesome it will be to finally close your home. I've helped a lot of different people. Just a quick story. This guy Rodney here in the Dayton area, and his story's on my website. He was turned down by one of the big online lenders. Unfortunately, he was just distraught. It was his dream to own a home. It was actually not my biggest closing. That's one of the smaller closings I've done. But going to the closing and seeing the look on his face when he smiled at me and said, "Wow, we did it," and I was like, "Yeah, we did." It was just amazing. And that's the kind of feeling I love doing. I get just total joy in my heart helping veterans out. And so if you need my help, please reach out to me. You see my website, scarpero.com, right there below. You can also call me at 937-572-3713. Look forward to working with you. Thanks. Bye.